If you do not know the difference between a W-9, a W-4, and a 1099, the IRS already has a plan for your money, and you are not going to like it. Millions of freelancers fill out these forms every year. Most have no idea what they are actually signing, and that ignorance is costing them thousands. Here is the reality in 2026. There are over 72 million freelancers and independent contractors in the United States. Every single one of them deals with at least one of these three forms. But here is what most people get wrong. These are not just paperwork. Each form determines whether you pay your own taxes or the IRS takes them from you automatically. Get it wrong, and your client is legally required to withhold 24% of every dollar they pay you. That is called backup withholding, and it kicks in the moment your form has a mistake. So let us fix this right now. I am going to break down all three forms, what they are, who fills them out, and exactly which one you need. No jargon, no fluff. Let us start with the W-4. The W-4 is the employee form. If you work a traditional job, clocking in, getting a salary, receiving benefits, your employer gave you a W-4 on day one. This form tells your employer how much federal income tax to take out of each paycheck. You fill it out once. They handle the rest. Taxes withheld automatically. W-2 sent in January. Done. But here is where freelancers get destroyed. If you are also doing freelance work on the side, you are not getting anything withheld from those payments. Zero. Your client is not your employer. They are not touching your taxes. So while your day job is handling your withholding, your freelance income is sitting there, completely untaxed, all year. And come April, the IRS wants all of it at once. That is how freelancers end up owing $5,000, $8,000, even $12,000 in one hit. They thought their W-4 job had them covered. It did not. Now the W-9. This is your form as a freelancer. When a U.S. business wants to hire you as an independent contractor, they send you a W-9 request. You fill it out, your name, your address, your taxpayer ID number, your entity type, and you send it back. The client keeps it on file. It never goes to the IRS directly. But the information on that W-9 is what your client uses to file your 1099 at the end of the year. If anything on your W-9 is wrong, the IRS flags it. Your name does not match your SSN? Flagged. Wrong entity type? Flagged. No signature? Your client can legally refuse to pay you. Here is the 2026 update you need to know right now. The IRS released a draft W-9 revision in January 2026, and there is one major change that is already tripping people up. If you are a sole proprietor, even if you have an EIN, you cannot use your EIN on the W-9. You must use your SSN. The previous 2024 version allowed sole proprietors to enter either their SSN or EIN. That option is gone in the 2026 draft. Using an EIN when you are a sole prop is now an explicit IRS error, and it can trigger backup withholding. But there is something even more dangerous about the W-9 that nobody talks about. You are handing over your full legal name, your address, and your social security number every time you send this form. One unencrypted email, and that is everything an identity thief needs. Never email a W-9 in the body of a message. Use a secure portal, encrypted email, or a password-protected PDF. Every single time. Now the 1099. This is not a form you fill out. This is a form you receive. At the end of the year, every client who paid you $2,000 or more in 2026 is required to send you a 1099 NEC. They must send it by January 31st. This is brand new. Before 2026, that threshold was $600. Under the One Big Beautiful Bill Act signed July 4, 2025, it jumped to $2,000. What that means for you: if a client paid you $1,500 for a project this year, they do not have to send you a 1099. But you still owe tax on that $1,500. The IRS does not care if you got a form or not. You earned money. You report it. This is the trap most freelancers walk right into under the new rules. They see fewer 1099s in January and think they owe less. They do not. The income is still there. The tax is still there. As a 1099 worker, you pay self-employment tax at 15.3%. That is on top of your regular income tax. While a W-2 employee splits that with their employer, you pay both sides yourself. On $80,000 of freelance income, that is roughly $11,000 in self-employment tax alone, before a single dollar of income tax. That is why the W-9 matters so much. Because if you mess it up, you do not just lose paperwork. You lose 24% of every payment until you fix it. So let us make this crystal clear. W-4 is for employees. It tells your employer how much tax to withhold from your paycheck. W-9 is for freelancers and contractors. It gives your TIN to the client who is paying you. 1099 NEC is what your client sends to the IRS and to you at year end. It reports what they paid you. W-4 means you are an employee. Taxes are handled for you. W-9 means you are a freelancer. You handle your own taxes. 1099 is the receipt the IRS gets in January. But here is the twist most people miss. You can need all three of these in the same year. If you have a full-time W-2 job and you freelance on the side, you fill out a W-4 for your employer, a W-9 for every freelance client, and you receive a 1099 for every client who paid you $2,000 or more. And if you do not adjust your W-4 withholding to account for your freelance income, your W-4 job will under-withhold all year, and you will owe a penalty on top of the tax bill. The IRS underpayment penalty kicks in when you owe more than $1,000 at filing and did not pay enough quarterly. In 2026, that penalty rate is 7% annually for Q1, compounded daily on the unpaid balance. Miss all 4 quarters, and that adds up fast. Here is exactly what to do right now. Step 1. Figure out which worker you are. Employee with a traditional job? You need a W-4. Freelancer or contractor? You need a W-9. Both? You need both. Step 2. If you are freelancing, get your W-9 right before you start. Use your legal name exactly as it appears with the Social Security Administration. If you are a sole proprietor, use your SSN, not your EIN. Step 3. Estimate your freelance income for 2026. Multiply by 15.3% for self-employment tax. Add your income tax estimate. Divide by 4. That is your quarterly payment amount. Step 4. If you have a W-2 job and freelance income, update your W-4 withholding with your employer to cover the extra tax. Use the IRS tax withholding estimator at irs.gov. It is free. Step 5. Never wait for a 1099 to report income. If you earned it, you owe tax on it, regardless of whether your client sent you a form. If this video saved you from a surprise IRS bill, subscribe right now. I post weekly tax tips built specifically for 1099 workers and freelancers. Every video covers real IRS numbers, not guesses. Hit save on this video. You will want to come back to it when tax season hits. Drop a comment below. Which one confused you the most? W-9, W-4, or 1099?